So I think going forward, are we on a policy pause? I think we are probably on a bit of a policy pivot in that the easing bias is still there, but we are likely to see different kinds of easing. So the monetary easing, I think today wasn't a surprise given what happened last week. Last week, we were actually one of those who were surprised by the fact that they haven't actually moved. So the fact that this week they've stayed still, I think for all the reasons that we mentioned earlier, bank profitability, the fact that transmission mechanism is so weak, nobody is really borrowing. I think that all adds to the fact that monetary easing really isn't.
But they're talking, okay, so let's talk about the other measures that they're looking at, right? And there's much talk about those special bonds, which are going to be off balance sheet. How will they work? Like, apparently banks would be the ones who would be buying those bonds and keeping it on their books.
Exactly.
But so I mean, it's whether the government keeps piling on the debt or banks, it's one of the same thing, right?
It is. So
you've not really answered the question. You answered the question with a different solution. I don't know. I just feel like it's.
I think if you look at the special bonds, right, or you look at the PSL that they have used, some of these tools are traditionally used for really the kind of last resort policy tools, right, the really powerful ones that has a very immediate impact. And I say immediate impact because it's effectively giving cash to whichever industry they want to target. So I think that compared to broad-based monetary easing is probably more targeted and more effective. To your point, I think the biggest loser out of this property downturn is really the banks, right? They've been asked to take on more debt, they've been asked to take on more property, bad assets, they've been asked to do a lot of national service. So the question here is, yes, we might get over a bit of a cyclical hump, if you like, and perform relatively well for the next year, but the cost is going to come in 10 years, 20 years when the economy doesn't really, respond as well to really a downturn.
Is the biggest loser really the banks, or is the biggest loser the average everyday household in China that maybe has their own house, has their own mortgage, have seen prices absolutely plummeted, has seen their equity investments absolutely plummeting? So that's what needs to be addressed, and we were talking about it before as well, Brian. Like, they're not addressing the key thing that they need to fix.
Yes, exactly. So I think what we are really hoping for, and what I think so we talk about how easing have been priced into the markets, right? So I think what kind of easing haven't been priced into the market is the kind of consumption support. So we've had quite a relatively resilient year in terms of household spending, all things considered last year. It's still kind of below pre-pandemic trend, which is not what we like. But because a lot of that, according to our analysis anyway, is driven by the fact that labor incomes haven't really catch up. So what they can do this year is, they obviously don't like to give consumption support, so they could support the labor market instead so that wages go up. And that could help offset some of the negative wealth effects that comes from property price decline.
Doesn't that risk the banking sector?
Right. I think from our standpoint, I mean, we're focused so much on the underlying Chinese consumer. And to Will's point, I mean, the banks have kind of stepped in with a significant amount of national service, shielding that end consumer, right, from the majority of the decline in property price. But still, we haven't seen consumers really open their wallet, to your point.
Yeah.
Exactly. And I'm just wondering, I mean, from a policy standpoint, yes, but if you survey the underlying Chinese consumer, I mean, what would make them feel better about opening up their wallet? So
what drives consumer confidence in China, right? In China, there are three things that drives consumer confidence. One is property, which we know is not going to recover anytime soon. One is food prices, which actually is doing fairly well, deflationary if you like. And the third one is really incomes. So there are only that many variables that the government can play around with. But also I think when we think about the consumer, we think about not just a cyclical trend, but also we think that the Chinese consumer is undergoing a bit of a secular downgrading, right? People are really spending less, or at least on the more low cost, low value added stuff. And that I think is something that, if you think about it from a policy standpoint, where you're going to support, you might want to offer support for maybe some of the higher ticketed items, right? That could boost consumption. We've seen some of that boost in August last year when they supported some of these high ticketed items. But I think we're really playing on the margins here, I think.